Welcome to The Explainer, where we break down big ideas. Today, we're going to tackle a really important question, one that honestly keeps a lot of new investors up at night.
It's a tough reality, isn't it? But there are some very clear reasons why this happens over and over again. And to get to the bottom of it, we're going to lean on the insights of Dinesh Thakur. He's a 30-year market veteran and the chairman of Angel One, so this is a guy who has seen it all. So to really understand the challenges investors are facing right now, we actually have to go back in time to a single event that pretty much scarred an entire generation.
The car was right in the thick of it. I mean, can you imagine? You're 21 years old, you just started your own brokerage, and then bam, a massive scam just blows up the entire market. The fallout was so bad that it created this deep-seated fear, which led a whole generation of parents to warn their kids that the stock market is just too risky a place to put your money. Okay, so let's fast forward to today. That specific fear might have faded a bit, but a whole new set of dangers has popped up. Thakur sees a new generation falling into a different, but, an equally devastating set of traps that just destroy wealth. He's seen these patterns for decades, and they almost always lead to the same place. You've got the replication trap, where you try to copy a famous investor's portfolio without knowing when they bought in. Then there's the myth of the magic tip, people paying for what they think are guaranteed stock tips. Or the classic cherry-picking fallacy, just buying a stock because it took a dip without doing any real research. And maybe the most dangerous of all, chasing the penny stock dream, which are usually just tiny companies being manipulated by insiders. And this quote just says it all, doesn't it? Think about it logically for a second. If someone really had a secret for getting rich, they'd be using it themselves, not selling it to you for a subscription fee. It's such a simple check, but it can save you a fortune. So when you put the two approaches side by side, the contrast is just stark. Cherry-picking stocks is a high-effort, high-risk game that really requires pro-level skills. And even then, you're likely to underperform the market. But index investing, it's low effort, low risk, and it's absolutely perfect for beginners. The data is clear. Trying to outsmart the entire market is incredibly difficult. And this all leads us straight to Thakur's powerful solution. After watching countless investors make the same costly mistakes for decades, Thakur is completely convinced that the path to building real, long-term wealth is actually way simpler than most people think. I mean, you can't get more direct than that. He's saying that for the average person, the single best strategy is to stop looking for that one magic stock, that needle in the haystack, and just buy the entire haystack. In other words, buy the whole market. So how do you actually do this? Well, it's through something called an index fund SIP. A systematic investment plan, or SIP, just means you're putting your investing on autopilot, a fixed amount of money on a regular schedule. And when you put it into an index fund, you're buying a tiny piece of all the top companies at once. It's a simple method that just takes all the emotion and the impossible guesswork out of investing. And here it is. Here's the number that really seals the deal. After 30 years of watching the market, Thakur says that a staggering 90% of regular retail investors will not be able to beat the market index over time. So why would you gamble on being in that tiny 10% when there's a proven path to success right there in front of you? And this really shows why it's so powerful. You get automatic diversification, so you're not sunk if one company goes under. The costs are incredibly low, which means more of your money is actually working for you. The performance has been historically strong and consistent. And maybe best of all, it's effortless. You set it up and you can focus on your career while your money quietly works for you in the background. So if index funds are the way to go for most of us, what does a market expert like Thakur do with his own money? You might be expecting some kind of complex, secret portfolio. But his strategy is so simple, it's actually kind of shocking.
That's right. He puts 100% of his investment capital into his own business. Why? Well, his logic is that he believes so strongly in its growth potential that it's the single best place he could put his money. He is all in on his own company.
Okay, so this is where his philosophy takes a really fascinating turn, and it challenges that typical save every penny mindset. If all his investment money is tied up in his business, what on earth did he do with the profits he makes? This question just cuts right to the core of it all. He believes that money is a tool. It's not just a number you're supposed to accumulate for the sake of it. So for Thakur, this means actually using his money to live. He's passionate about cars, so he indulges that passion. We're talking Ferraris, Lamborghinis. He takes vacations. He creates experiences and memories with his family. He believes the real return on investment isn't just a number on a screen, but a life that's actually well lived. And that leaves us with one final powerful thought. Beyond all the charts, all the returns, investing is just a tool. So as you build your own path to wealth, you have to ask yourself, what kind of life are you building with it? Ultimately, what is your money for?